Hello, everyone, and welcome to tonight's session of TradeFinder Live. My name is Zach. I'm one of the team here at Elliott Wave Options, and I'll be facilitating this session tonight with our speaker, Rob Roy. I'll introduce Rob here in just a few moments, but first we need to cover off a few important details about the session. The first and foremost is our live disclosure disclaimer agreement. If you've seen any of our live sessions previously, whether it might be a TradeFinder or insiders meeting, and you've seen this, the main thing to take away from it is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. We do have this available on our website to be read in full detail there, but otherwise feel free to take a screenshot, and that's the main point to take away. All right, so for this session, we actually only have one method of asking questions, and that's going to be circled there on the screen for you, which is going to be the Q&A window. So at any point, please feel encouraged to write in any question you might have into that window. Just know that Rob can only take questions from that window, so the chat window is strictly for all attendees and any support-related queries. So anything that I would be able to assist with, please feel free to write that in the chat window and interact with other attendees live, but be sure to leave your question in the Q&A window if you want it addressed from Rob at the end. Just keep in mind that the question portion for this session is a bit more brief. We only take a few questions at the end. So if we don't get to your question, just know it has nothing to do with the validity. We just only have so much time. So with that, definitely feel encouraged to attend the insiders meeting if we don't get to your question, when there's much more of a focal point on that portion. So other than that, I think that about covers off all the important details. So at this moment in time, I'll introduce Rob Roy.
Hi, everyone. Holy cow, I saw that there's a viewer from Saudi Arabia and it's 4 a.m. Now that is dedication. So welcome to everyone that is viewing in their various parts of the world. And if this is your first time with TradeFinder, we give you a brief rundown of what we're going to cover. And with what Zach said, as far as the questions at the end, we don't have very many current, what would be considered open trade considerations. So perhaps we can get to a few more questions at the end, but sure like to hear from you. Welcome to everyone from the various social media streaming services. The way TradeFinder works is we'll talk about the markets. We used to talk just primarily about the US market, but we have viewers all over the world, as I just mentioned, the person from Saudi Arabia, 4 a.m., and that is dedication. But we'll talk about a lot of international markets as well, based on your request. And then we'll go through and look at a case study trade alert that we can find for this evening. We'll review ones, as I said, that could be considered open from past, but I mentioned there's only a few of them that are left. And then we'll have the Q&A at the end. And really, that's it. That's how TradeFinder works. So let's go ahead and jump in and get to the charts. I want to just quickly check here and make sure that you are seeing the screen, the chart, and here's the S&P. So we had a bit of a bounce today, a little bit surprising to me when we see what occurred with interest rates. I'll show you that chart in just a moment, but the key things to look at here, obviously, when you see a move like that, support 440 has been a battle line, right, on the SPY. So that's support resistance, bulls and bears fight it out. They have been for a week. And finally, it looks like, at least for today, the bulls got a little bit of an upper hand. Well, we'll see what happens tomorrow. I'll talk more about that in a moment as far as why I say that. But when you see a bounce like that, you want to see what kind of volume we had. A little bit below average, but not horribly below. You can see yesterday we had that low volume doji, which meant something was likely to occur today. A significant move up, down, and it happened to be to the upside, but we didn't even quite reach average volume. So enough volume to pay attention to, but it still leaves the move a little bit suspect. And when we put the moving averages on, you can see that we did close just above all the major moving averages. We talked about that Thursday night, as Zach talked about our insiders meeting. That's for our alert subscribers, and that's for them only. We do have an extended Q&A there to get as many questions asked as possible. But we talked about how the 10, 30, and 50-day moving averages were all converging at the exact same spot. You don't see that very often. It happens, but not very often. And so here, the markets ran right up to it early in the day, and then just kind of traded sideways to down. And then at the very end of the day, there was a rally to the upside, which is what pushed the close just barely above that 10-day moving average. If we look at the DMI, you can see that, well, the positive directional indicator is moving to the upside, but it hasn't crossed yet And our subscribers know when looking at the DMI, one of our favorite confirming indicators to Elliott Wave option, that they have to actually have the crossover, the ADX has to move up, all the pieces, parts, if you will, of the DMI have to be in line. They're not there yet. DMI can be viewed as a lagging indicator. So we look at the CCI to give a little bit more of a quick, it's more responsive to what occurs in the day-to-day markets. Another one of our favored confirming indicators as part of our technical trading system here at Elliott Wave Options. And you can see the CCI has bounced up a little bit, not back to the zero line, a little bit of a bounce. It was getting down towards the area, not quite all the way to oversold, but getting in that area. And so, now it's already getting back close to zero. So anything can go from here. We can go higher, lower. And we talked about now we have two zigzag patterns. We have a qualified zigzag pattern to the downside, and we have a qualified zigzag pattern to the upside. You can see that in last week's recording. Neither one of those is disqualified yet. Both are still in play. And when that kind of thing happens, you tend to be a little bit more cautious, or you should be. I think the prudent thing to be is a little more cautious until one of those patterns takes control. One of them will become disqualified, and one of those will be confirmed. Right now, they're both qualified. So we'll see how that plays out and which pattern wins out. And then that's when you can become a bit more assertive, if you will, in your directional trading. So not much else to say about the SPY. Looking to see if we can put a little distance between where we close today and major moving averages would be significant. Futures are down a bit right now. I'll explain that to you again, as I said, in a second. But here's why I said I was a little surprised on the fact that we had such a strong rally today. Interest rates just continue to move to the upside. Now, we're going to talk about oil and we're going to talk about natural gas. Those charts also ties into the case study that I want to share with you that our alert subscribers enjoy, give you an idea of how our alert service works. All that stuff ties together. So oil and natural gas were down, but interest rates are continuing to rocket to the upside. And I think that maybe when we hit 3%, that could be a little bit of a breathing time. We are still a bit overbought, if you will, on rates. Rates are significantly above the 10-day moving average is what I'm trying to say. But so far, not much of a rest other than there in the middle of April. There's a little bit of a rest. And now as we're moving towards the end of April, we're rocketing back to the upside again. And so you can see just a little bit of a break here towards the end of March. But notice that other than that, there hasn't been much of a consolidation even in the strength rally in rates, just moving to the upside with significant force. And at some point in time, that's going to take its toll on the market. Certainly didn't today, but if that continues, it will. It always does. So you also want to be a little bit leery of rallies like today and see if there's any bit of a little bit of a trap there. But if you get follow through tomorrow on better than average volume, the charts speak for themselves, and you have to trade what the charts tell you. I say it all the time, and anyone else is still the same. The market doesn't care what I think. The market doesn't care what anyone else thinks. The market's going to do what the market's going to do, and you need to listen to what the market's telling you. So if we take a look at the dollar, this part I'm happy about. I was a little concerned back here on the 14th where we had that outside day, and that meant something could happen. I didn't want to see the dollar turn and start to give up these gains. At some point, that wave 5 will occur. It's going to happen. But right now, the wave 3 continues. And with all the things that are going on globally, the lockdown in China, the war, all that stuff that's happening, I think that the stronger the dollar stays now, the better off we are, at least economically, for the long term. And it's a better signal for perhaps global economic potential health down the road as well, even though the short term, not so good. And so you can see the ADX has caught up to the positive directional indicator here. It's not quite to 40 yet, so we still could go higher. We look at the 10-day moving average here on the dollar, slightly, but not significantly overbought. So the dollar could continue to rally if it wants. Eventually, we're going to see 104 there, as you can see where the wave 5 projection is. And that seemed a long ways away just a couple months ago, but so far, not so much. I expected 100, and now it's just, okay, what happens from here? as we continue to move above 101, closing at 101.02 today. Really, really impressive stuff on the dollar. You would expect that to happen, though. And as I've said so many times, that I would be really concerned, not just from our markets, but from global economic health. If we started to lose the dollar, that would not be a good thing. One thing I wanted to share with you, I don't know if you've seen this, perhaps you have. I know a lot of people trade this stock, but Netflix. I don't know if you saw the move in Netflix after hours, but I wanted to show you the Elliott Wave chart on Netflix. So here we are in a wave 3 to the downside, and the price target is down here around 240. Well, I don't know if you saw the earnings report. I'll tell you about it after hours, but at the time of this recording right now, right there is where Netflix is trading, right in the middle of that tap box, which is time and price projection, almost smack dab on the 5. It may actually hit it tomorrow. We'll see how the trading occurs, but in after hours, that's where we are, right where the arrow is. Netflix on an earnings miss. And the big thing that was concerning people on why the stock is down so much in after hours is they lost 200,000 subscribers. That's the first time they've ever done that, where they've lost subscribers. So that not a good thing. They blamed it on the war. They blamed it on inflation. They blamed it on, which I think this is the big one, competition, right? Everybody's got a streaming service out there now. So yeah, people are going to streaming services to reduce their bill. They're paying a big, large cable bill, so they just do internet streaming. But if you have every internet streaming service out there, you're paying the same amount you were for your cable bill. So you have to pick and choose. And so some people obviously have chosen other outlets other than Netflix based on those numbers. But look at that. The forecast there, it's been there on Netflix, and we're right smack in the middle of it. And yet there are still Elliott Wave haters out there. Just absolutely blows me away. We have the data to prove it. Look at that. We have AI data that proves that it works, and people still jawbone negatively. So, go about your business, but someday maybe you want to come and learn a little bit more about this system, which is Elliott Wave. We think we're the right place to learn too. We really pride ourselves in our education. So I'd love for you to come kick the tires. If you want to try an alert subscription, we only charge monthly. So you come in, try for a month, you don't like it, leave. And it's easy to cancel. We make it as simple as possible to either subscribe or to unsubscribe. So love to have you come give us a shot. And so what I would like to do is show you, while I'm talking about our service, one of our case study alerts that we just closed this week. It was on MOS. Now, we were only in this trade 6 days, and we made 30% in 6 days. Okay, so 30%, that's nothing fantastic, right? 6 days, you make 30% less than a week. Not so bad. We closed another one today that we made 40% in a week, but I wanted to show you this one because it ties into something that I wanted to talk about tonight. One of our subscribers wrote in, and that's another great thing about our alert service. We have support that answers questions 24/7. But if you wanted to send a question directly to me, you can do that. Now, our support guys, they get back to you immediately. I don't want to promise you that I'll get immediately back to you, but I get back to you within 24 hours on average. 24 to 48 hours, somewhere in there, I will respond to you. And so taking a look, and it'll be me. Somebody's like, there's no way Rob is answering all these. Yeah, if it's sent to me and it says my name on the response, it's me. If it says support, it's somebody else. But if it's my name, nobody else uses my name. So if you send me a question and it says I'm the one that responded, then it was me. I just thought that was humorous. But so when we take a look at MOS, let's look at this alert. The entry was sent out on April 11th, and you can see here was the chart. And when you look at where the extension is, up here, it shows that it looks like Mosaic could go to 85, right? I think it could go even higher than that, but that's the setup. And then here was the exit that we sent out yesterday, and we're nowhere near 85. Continue to the upside. That's why we had a profitable trade. Couple things that were concerning here. We're a tiny bit overbought from the 10-day moving average, not significantly, but a tiny bit. Starting to get some separation between the 10 and the 50-day moving average. You've heard me say numerous times if you've listened to any of the recordings that I've done, because I say it so often, but it is a hard, fast rule. No security in any time frame gets very far away from the 10-day moving average. And something that's almost as hard a fast rule as that is the 10 and 50-day moving average don't separate significantly for very long either without coming back together. So we're starting to see that separation. See what I mean? If you look back towards the end of 2021 back there, see how close those lines are? The lime green line's the 10-day moving average, the royal blue line's the 50-day. That's what they normally aren't that far apart. Now we're seeing a bit of separation. So what that's telling you is we're starting to go a bit vertical, and that's another overbought type of reading. So the fact that that's occurring was a little bit concerning. So with that on top of, here was the main trigger, and this is where the question came from one of our subscribers, is if we look at the chart of natural gas, and I'm not sure if you're aware of it or not, but natural gas is a big product when you are looking at creating fertilizer, which is what Mosaic is. And then you look at this chart, there's the chart of natural gas yesterday. So look how vertical that chart is. And then you have a gap up, which looked suspiciously like a blow off top to me. So people are like, oh my goodness, I'm missing this big rally in natural gas. I've been watching it too for our subscribers and talked about this last week. Said they all know me. I cannot chase that vertical move like that. So we're waiting. And then when you have a gap to the upside, that's when you're starting to feel like, okay, this might be it. This is where, people just throw in the towel. Okay, I got to get in now. And so you get this gap up, and it's called a blow off top. And then so that normally sets yourself up, along with the fact that we have this kind of separation from the 10-day moving average for a move to the downside. So if natural gas is going to move to the downside, Mosaic is probably going to move to the downside as well, because they're tied in together. And so here's the chart, and here's what happened with natural gas today. Big move back down, almost touched the 10-day moving average. So significant drop in natural gas. And guess what happened in Mosaic today? You probably would imagine that it followed to the downside, which is exactly what happened. So Zig finished down not as significantly, but down on the day. So we are still going to wait and see if we can find another entry where we can get a better price. But you see a bit of a doji there. And so maybe it wasn't down significantly today, but with that drop in natural gas and a doji here, I think we did the right thing taking the gain yesterday. Let's go on pause and see if perhaps we don't get a little bit of a pullback here and maybe get another entry for that next run up to the expected target of 85. So still where we think it's going to go, but signs saying that we could be due for a pullback. Okay, fine. Let's take those gains and then wait for the pullback and then re-enter. And if we're wrong and it continues to power ahead, we still had a nice profit on a trade, and that's never a bad thing. So thought I would share all those things with you. I thought they might be interesting for you. And so now let's go ahead and take a look at some of the rest of the markets, and then we'll look at some of the what might be considered case study considerations that we found in past TradeFinders that may be still open on your screens. One of them, I think we probably should go ahead and close tonight. It's had a nice run, but we'll get to that in a minute. So looking at the rest of the market, let's look at the Dow. We always look at the diamonds for the Dow. You can see it bounced today as well. Still in this major bit of consolidation and kind of up against some more resistance here on the diamonds there at 350. We need to clear that 350 level, then the diamonds have some room to run. And that could be a significant move to the upside if they can get above 350. They got to do that first. Also having the 10, 30, and 50-day moving averages all converging in almost the exact same spot. Pretty interesting stuff between both the Dow and the S&P. So now let's look at the Qs. And I've been on record. I don't think I need to keep saying this, but I know that we have new subscribers and we have new viewers each and every week to TradeFinder. So again, welcome to those of you, if you may have just joined on one of the live trade streaming services, social media streaming services, or if you've been a long-time viewer. I appreciate everybody's viewership. I think that the Qs are going to underperform the rest of the market. And I'm not saying that the markets can't finish to the upside at the end of the year. I just think that whether they finish up or down, the Qs will underperform the SPY and the Dow. And that's because of rising interest rates. And that's what usually happens. That's the normal thing. So it's not like I'm making any sort of a fantastic major call. That's history. That's what usually occurs. So I'm just reciting that. Look at the difference here. So on the Qs, we bounced up, hit the 10-day moving average on the high, didn't even make it back to the 50-day moving average as we did on the SPY. So there you go. There's the lagging right there on both the diamonds and the SPY chart, where yes, we did have a bounce today, and that was an important level to hold. So on the Qs, the line in the sand is 340 that they're fighting out. Break that, and we're down to 320. There's nothing to stop it from going to 320. So if we break 340, we're going to go to 320. They'll try to hold there. If they break that, then I think we come down and hit that wave 5 target at 300. As I mentioned last week, this Elliott Wave impulse pattern, this 5-wave impulse pattern on the Qs is about as classic as it gets. Now, as great as Elliott Wave is, and I'm one to constantly sing the praises, I've been trading it since 2001. It isn't perfect. It's not 100%. Nothing is. But this is a really good pattern, and we need to pay attention to it. And if we can break up, move to the upside and take out that 4 and disqualify the pattern, well, then you reevaluate. But until that occurs with that wave 4, it's the strong fib level of 61.8, we look for the potential to move down here. And so bouncing off this support level is not a surprise at all. And I think we probably want to take a look at volume there. Again, okay, average volume, but nothing significant. Not enough really to break above major resistance. Now, if we get volume and follow-throughs tomorrow, that could be interesting. The Qs are down right now in after hours. Why? Because of Netflix. Netflix is down, bouncing around between down $85 and down $100 in the after hours because of that earnings report. That's going to make it awfully tough for anything on the NASDAQ or the Qs to finish to the upside tomorrow, but we'll see how it plays out. So if we could recover from that and have a follow-through day, we need to pay attention to more potential upside if that occurs. Long way from that happening, but if it does, then again, we'll watch it. So let's take a look at the EWC Canada, see if we can recover that 40 level, trying to today. So all these days trading right underneath 40, and that's been the major point of support resistance, as we've talked about in the Canadian market for quite a while. We broke above it, and then we came back down below it. We disqualified the 5-wave impulse pattern. So we're in a corrective mode. So consolidating underneath this level at 40 and closed right smack on. In fact, the close was at 40.02. So it doesn't count really as a break back above resistance. It needs to be more significant than that, in my opinion. So again, we'll see if that can occur tomorrow. But if you're watching the Canadian market, again, probably on pause right now, just keep it in neutral, wait and let it tell you, can we break back above 40? Then you can go long again. If resistance holds and we break down, well, then you're looking down at like 39, 38 and a half, and perhaps you look at something short. But for now, we just wait and see. Let the charts tell us. We don't need to guess. And when you're in a corrective phase like this, it's not really a great triangle formation. It's consolidation, but it's not a great triangle formation. So if you don't have a great pattern, don't force it. Just wait. Be patient, wait, and let the patterns show you what they're going to do. Bitcoin, man, Bitcoin is, I'm impressed with Bitcoin's real fight here at 40,000. It looked like we were going to break it. It tried hard yesterday. As you can see, moving to the downside, we traded down as low as 38,547 yesterday. Couldn't close there though. The bulls came back in. The Bitcoin bulls came back in, and we got it all the way back up to. And I want you to note that the 5-wave pulse pattern there has gone away as well. So back in corrective mode for Bitcoin, which is interesting because the pattern was to the downside. So that would be a positive for you crypto and Bitcoin specifically bulls out there. A little bit better triangle than in the Canadian market. Still not great, but You have a lot of touches here on the higher lows. You had some on the lower highs. I don't like all this gap stuff here. Perhaps we climb slightly up and form a little bit better triangle, which would mean something of significance is about to occur. We just had a triangle that was nicely formed back here, which did yield an upside breakout, and then it retraced it. That's one of the characteristics of an Elliott Wave corrective triangle is once the breakout occurs, it retraces back to the breakout point. Not always this fast. It happens at some point in time, sometimes immediately, sometimes it takes a while. In this case, Bitcoin had a nice upward breakout and then it came right back down to the point of the breakout. And then we've been consolidating around this 40,000 level, also trading back up to the 10-day moving average today. And at the time of this recording, this is right about where it's trading to. So nothing significant. I know when people say, yeah, Bitcoin trades 24/7. I know, but we have to have, in order to look at the patterns, we need to have some end of day type of data so that we can see what's occurring. So I know it's still trading now, but even at the current hour, it's right about where you're seeing on the chart. So let's take a look at the ASX in Australia, because something really interesting trying to happen here. We talked last week about this little triangle, and I mentioned that Elliott says, don't forget the small triangles, don't just pay attention to the big ones. And look, we're trying here to break to all-time highs. It's giving it a go, as they say down under. And we look right here, right there at 76.40. And man, that would be impressive if Australia breaks to a new all-time high. It's awfully close. That is a really nice breakout of that small triangle. Again, we talked about it. We pretty much called that. And we look at the moving averages here, and you can see that the issue is now we're right up against that major resistance level, and we're a bit overbought. There's the 10-day moving average right at the point of the triangle. So we're a bit overbought at this moment. And that's not the scenario that you want to be in to try to break to all-time highs. I'm also a little concerned about this separation that's starting to occur between the 10 and the 50-day moving average on the ASX as well. Can we break and hold? That's the key, right? Because Canada did it. I was surprised to see Canada had a scenario just very similar to this, and they did break above 40. They did break above resistance, and I was surprised at that, but it didn't hold. And that's the point, that usually when you break a point of resistance and you do it when you're in an overbought scenario, there's just not the energy to hold it, to fight off the sellers that come in when they say new all-time high, and they come in and try to push it back down. So that's the problem that with the ASX at the moment is great breakout of this triangle. That's about the move that was expected on the width of the triangle. So we're there at resistance. Can it break above it? If it does, I'd be impressed. Can it hold it? If it does, I would say we may be looking at a scenario like Canada that maybe we need to consolidate. So if you're long the Aussie, I would say right here, let's just go sideways. Let that 10-day moving average catch up and build some new momentum and energy, and then blast off above that to new highs. And that's a scenario where it could really run and hold those, hold that break. But for now, I think we're just a little bit overbought if it wants to give it a go now. So looking at the Nifty, to throw in some other markets, I had some suggestions on YouTube of other markets that we're going to add in. And so next week, you'll see some new markets that I'll start showing on the TradeFinder. Appreciate the suggestions. And we will take heed of those and add those in next week. This week, I wanted to spend that little extra time on Netflix and what was going on there, because I know it's so liquid, everybody trades it. Some of you are probably going to ask about it after hours or out in the Q&A. So I wanted to give a little data on that. So we'll keep it still tuned down a little bit on the number of external international markets. But man, this Nifty seems to do this a lot, but there's a triangle still trying to break to the downside out of that, as you can see, and that's interesting. Can it follow through? If it does, then we could be moving down to wave 5. Now, for a long time, India really had a very strong market. They had one of the better looking charts and markets, but not anymore. That's broken down, and when our 5-wave impulse pattern to the downside with that wave 4, just like the Qs, right at that 61.8% Fibonacci level, which to me is the strongest one. So I really pay attention to that level. And it looks like it's trying to break to the downside out of that triangle. You need follow through, you need confirmation, you know all the rules. It has to have a second day. We'll see if that plays out. And then the DAX, and the DAX is relabeled so many times, and here we go back to the downside again on the DAX, following this move lower. And we've talked about how this wave 3, the wave 5 relabeled 3 times back to a 3. And I can't remember in all the years I've traded Elliott Wave that happening 3 times. I can remember a handful of times where it relabeled twice, it relabels once a lot, twice a bunch, but 3 times, I don't remember that. And so here we are coming down again. And so it looks like that's also going to be for another run to the downside, come to confirmation on this 5-wave impulse pattern to the downside. Just amazing. And I don't joke about it. There are Elliott Wave haters out there. All you need to do is go back and look at a history. Look at the last 2 years of Elliott Wave and the forecast on the DAX. And it's very difficult to argue that Elliott Wave doesn't work. It has been so spot on the DAX. It's just mind-boggling. So that's we'll stay with those international markets this week. Again, I've seen the comments on suggestions for other international markets, and of course we want to widen the group viewership as wide as possible. We appreciate people getting up at 4 a.m. to come watch us, and so we want to show those other markets. And again, my promise to you, next week we will add in additional international markets. All right, so looking at the current case study considerations, or one that may be considered current if you had followed along with them. We looked at SIL. This is back on March 22nd, and you can see this triangle formation here. We actually did send this one out as an alert to our alert subscribers as well. We just made an adjustment to it following our risk management protocols. And there's the breakout that occurred. And since it's an upside breakout, we did take the put side off to hold the call side. It's a confirmed upside breakout. And then if you look at today, you're like, yikes, that's a move to the downside. Well, maybe. We'll see what happens tomorrow. That could change things. But for now, all it did was come down and fulfill an overbought condition that it created over the last 3 or 4 days. And then back to the 10-day moving average. So that doesn't mean anything. A follow through back to the downside would be a different story. If it bounces back up, it's got a gap here now. If it bounces back up, then all this was rectifying an overbought condition. But tomorrow we'll tell the story on SIL. Hershey Foods, we looked at that one on the 5th of April. There's where the chart was then, and we can move back to the upside here. So we're trading currently at 226. And when we looked at it, we were trading at 218. So we're up $8 on Hershey Foods. We actually sent out an alert on KHC, Kraft Heinz, for subscribers to stay in the food area. And we've already closed that out for a nice gain. That's the one I was talking about, and 40% in less than a week's time as well. So food, that's where the action is. And you'd be thinking, why? Well, pricing power, inflation. If you've been to the grocery stores, not only are prices higher, but you can't find stuff. They're out of a lot of things. So they are able to pass on the inflated prices, at least so far. And so that's where money's going to run and hide. It's the great rotation, right? Money has to go somewhere by law. Money that comes into all investment companies through mutual funds, IRAs, 401ks, etc. By law, a high percentage of that money has to be put in the market. Can't be held in cash, even if the market is going down. So if there's things that are concerning in the economy, like the Federal Reserve raising rates rapidly and withdrawing liquidity, then money tends to go to defensive sectors, and food is one of those. We looked at the chart of Coke last week, same type of scenario. And then last week, we looked at this one, which is MSM. So it was trading at 85. And then here's the close today, 86.50. So up a little over $1, kind of churned a bit, but still it's moved to the upside. And I'm waiting to see if we can take out that wave 3 high. So what we look at is the DMI to give us some idea. And it looked good last week, but notice that the ADX has moved above the positive directional indicator. So that's something to be aware of. We've got a little bit of a gain in it right now, but with that ADX above the positive directional indicator and the fact that we're at resistance, we need to be prudent on closing this one if that positive directional indicator cannot recover and move back above the ADX. If it moves back above the ADX, no harm, no foul, we're good. And we're probably breaking that wave 3 high and going to run even further. If it doesn't, then that resistance may hold. And so we might want to just take a small gain and get out. So we'll watch that one over the next couple of trading days as well. But that's it. That's the only of all the months and years we've been doing this TradeFinder now. That's the only alerts that would be considered open unless you didn't, you got a little bit greedy on some of the other case study considerations that we've looked at in the past. Sometimes we send them out as alerts to our subscribers, not all the time, depends on what happens the next morning, but that's the difference, right, between the case study considerations as we identify something and then say, hey, here's something you might want to take a look at, and then you're on your own. With the alert service, we send you out an alert for an entry, any adjustments, and the exit. So we hold you by the hand from the very beginning of the position all the way until it ends. And you can follow along with what we're doing if you choose. All right, so I showed you natural gas. Before we take a look at the charts to see if we can find a case study consideration for tonight, let's look at oil. And we had that triangle in oil. We had the upside breakout and a little bit of a pullback in oil. So let's look at the 10-day moving average there. And you can see if we walk it back, which is one of the cool features of the software, if you walk it back, then you can see that we were just a bit overbought yesterday from the 10-day moving average. So it moved with natural gas today, both of them coming back to the 10-day moving average, but definitely a breakout to the upside. Now, if it comes back to this point of the breakout and then breaks below it, well, then you have to look at that as a potential false breakout. It's not there yet, but potential is there. You would think that oil probably isn't done from a fundamental standpoint, but again, the market isn't going to trade based on assumptions to do what it's going to do. So we have to pay attention to that, especially when you have a symmetrical triangle. It can break either direction. So sometimes it gives head fakes. You might have this false breakout. We'll have to wait and see how that plays out. But again, it's very similar to silver right now, where it just came back and satisfied its overbought condition, as did natural gas. So we'll see how long this little pullback lasts in all those stocks before potentially resuming a move back to the upside. All right, so let's go ahead and look and see if we can find a case study consideration for tonight, and then we'll open it up for questions. If you're not familiar with this software program, it's called Profit Source. You can find out more about it at hubb.com. I think it's the best Elliott Wave software program out there. If I didn't think that, I wouldn't be using it. I'd use whichever one I thought was the best. And I've tried all the ones that I know to exist. And in my opinion, this one is the best, and it is the actual algorithm that Ralph Nelson Elliott wrote. It's not a personal adaptation of that algorithm. There's a lot of software programs out there that people have tweaked it and changed things and stuff. But I'm kind of the opinion, if we're going to respect this as a trading system, maybe we should follow exactly the way the guy wrote it. And so I know he was far smarter at math than me, so I'm going to follow along with that. And then if you're an Elliott Wave options alert subscriber, the folks at Hub added in all of these pre-computed searches. And what's neat about a pre-computed one is when you click on it, the charts automatically show you the results. Now you can program in your own search parameters and run a search and pick a date range and all kinds of different things you can do. You can create portfolios and amounts of at risk, and you can put stop losses, and you can do all kinds of cool things with it. It takes some time to run those, and the pre-computed ones are instantaneous. So it saves you a little bit of time, but there's still really cool things to do. But you can see that there's 10 results here on the bullish impulse just from one day. Now, one that's caught my eye that is likely going to go out to our subscribers tomorrow is DAR. Why? Guess what it's in? Darling Ingredients. Yep. It's in the food sector. And you take a look at this chart and you can see that now it looks like the DMI is setting up for another run here with the good separation. And that was important because we're getting up against resistance. So if there was any sort of hesitation here, it would be, okay, let me see it break 84 first. Let me see if it can break above that, tiny bit overbought from the 10-day moving average, not significantly, not quite as bad as the ASX in Australia, but a little bit. So if you wanted to be a little more cautious and say, hey, let's show me, break that 84 level first. The ADX is only at 25. So if it does break, there should be plenty more to run. And so that's been the hesitation so far with this move from consolidation. The next high was so close. Like, all right, let's see if that 10-day moving average catches up. So it did move back to the upside again today. It had a nice bit of a consolidation day yesterday, which I was hoping would be another one today. And if that's true, then it probably would have gone out as an alert today. But the fact that it moved that far to the upside, it's like, all right, now we're right there. And again, as I said, if it breaks that, there's plenty more to go based on where the ADX is. So no reason to force it. Let it come to us. So if we wanted to just to kind of wait on that one, I could understand that. And also want to look at Smuckers. Look at Monster Beverages on there now too. Tyson Foods. So you're starting to see all the ones in the same sector here. All right. So Smucker, Darling, Monster Beverage, Tyson Foods. You get the idea. So let's look at Smuckers has been on there, and it's got a nice run. Look at what happened today. Really nice break to the upside today, and it's hard not to like this chart. Look at that DMI. Let me take the oscillator off here so we can see it. Nice break there above 25. There's how the positive directional indicator came back and separated. That's good confirmation on that move today. And if we look at the moving averages, not an overbought scenario because it really was opening right at the 10-day moving average. So it looks like it wants to move higher. It's not in a 5-wave impulse pattern. So this is in corrective mode, which looks to me to be a big old huge zigzag, as you can see here. This big, massive zigzag pattern that's occurring. So I think this would be a great case study consideration for this week without even looking at the rest of them. Let's take a look at volume and make sure there was confirmation from a volume standpoint. And well, that would be a bit of a concern. It was rising volume, but not quite average. So that's not ideal. Let's take a look at the CCI. The CCI looks good though. It's in the upper end of the range going sideways. That's good trend confirmation there. Money flow was strong. So even though there was less than average volume, everything else is really good. And the money flow reasserting itself. I still say let's go ahead, and that's going to be our case study consideration for tonight. So SJM, and again, even if the market were to move to the downside, it's in one of the right sectors that will be collecting money, even if the market moves lower. If the market moves higher, most of the stocks follow the market anyway. So it's in the right place to be with current market conditions, is my opinion. So SJM is our case study consideration for this week. And with that, Zach, let's get to some questions.
Sounds good. Well done, Rob. Another on-time session. You really on a roll.
Don't jinx me, man.
Good point. Good point. So tons of great questions and comments coming in from both Zoom and YouTube. We'll start out first with David from Zoom. There's a number of symbols here, so I'm just going to give you the first two. First one being EOLS.
EOLS. So sitting right at massive support there at 11, no 5-wave impulse pattern. Let's go back a little bit and see. I haven't talked about this in a while, so I'll go ahead and bring it back up again. The primary levels that you watch for in stocks are 5 and 10, and the most aggressive investment objectives, like if it's a mutual fund that has an aggressive growth investment objective, they can buy $5 stocks, but only the aggressive investment objectives. To get into the growth and income, et cetera, the stock has to be at $10 or above. And so those are key levels, 5 and 10. So see how it held 5 down here a couple times, and that's what usually happens. So the stock was up, it starts coming down, and what will happen is if an institution has a position in it, they'll start buying again. They'll try to force those shorts out so that the stock can run, so they don't have to close out and realize the loss. As long as it's an unrealized loss, no harm, no foul. But if they have to sell because they're forced to sell because it breaks below 5 and that violates the securities rules, then they realize the loss. So they tend to come in and support it and hope to try to force the shorts out of it, which looks like they were successful doing it. Now the question becomes, can we get some more institutional interest? It had some. That's why you could see this furthers my point. See how we gapped here above 10 and took off? There you go. That's those, there's a lot more mutual funds, et cetera, that are growth and income, et cetera, that are just aggressive. And so there's your massive buying that came in there. And then we came down, got below 10. They jumped in again and couldn't hold it. And then it looks like, I bet there was some decent volume selling in there somewhere. Yeah, see these spikes here, the volume as it breaks below 10, they have to get out. That's those bigger volume spikes where the institutions that were in it, there's that volume spike right there supporting it at 5. See those? That's what I was talking about. That's the institutions coming in and supporting the stock because they don't want to realize the loss. And then you move to the upside. Well, we haven't really had anything yet. We've gotten back above 10. We have one little day here that pushed it up above 11 on the 17th. There was some institutional buying, but none since then. And to bounce off this 11 level and continue higher, they're going to need that. Really, nothing of significance from the DMI, which would make sense with the stock going sideways. It's a little bit of a descending triangle because 11 is such a major point of support, and then you see those lower highs. So just because it's a descending triangle doesn't mean it has to break to the downside. And talked about this a lot. There's a lot of education out there because it's easy to sell that, hey, a descending triangle breaks to the downside, an ascending triangle breaks to the upside. Not true. The data doesn't show that. If you have a triangle, it can break either way. So this could just as easily break to the upside as the downside. Out talking my voice there. So I think we need to keep an eye on that. If you wanted to be really aggressive, there's your stop is right at 11. If it breaks below that and confirms the break below it, then you get out. If you want to try to see if you can get an upside break from here, it needs some institutional support to jump in. Okay, next.
Awesome. Thanks for that, Rob. The next symbol will be FXI.
This is going to be interesting to look at. I haven't looked at the FXI in a while. We've traded it in the past, but with everything that's going on with the lockdown, not surprising here that we're in a 5-wave impulse pattern to the downside. I'm sure you've read all the stuff that I've read that with this hard lockdown, we were already behind on the supply chain. They're expecting that supply issues are going to be worse than they were in 2020 because of this hard lockdown that China has set up in some major cities. So it looks like we're marching right down that projection line, which is not, I talked about this last week because the Qs were doing that, but it doesn't mean that that's what's supposed to happen. It's just giving you a guide. It's just a visual thing from the 4 to the 5. It's not expected to just crawl down that line. So we'll see how that plays out. But let's look at the DMI. The ADX isn't high enough yet, I don't think, to break this 3 low here. But yeah, it's hard to imagine a real bullish scenario on China. If we look at the volatility is coming down a little bit, but with the moving averages, we're not that oversold yet. It just seems to be creeping lower, and down there around 30. It could try a little bit of a bounce here, but if it breaks that, then obviously we're testing the low, and then we're probably going down to the wave 5 low. So right here, right in this area between 30 and 31, where we're trading now, is what would have to hold if you're interested in going long here. If you want to go short here, well, I think the pattern supports that move for a not only a test of the recent low in March, but a new low.
Very well. That was interesting to look at. So appreciate the question and the analysis there. We'll transition over to YouTube, and Dom would like to look at CENX. Sorry, C.
Yeah, my bad. Century Aluminum, that should be a good one to look at. Oh, look at that triangle. Where's the ADX at? Almost. Kind of like to see the ADX down around 15. For those that haven't seen a bunch of the videos, we have an entire portfolio devoted to these triangles. This strangle system is kind of how I made my claim to fame in the world of options, creating a strangle system that is unique and proprietary to the best of my knowledge. And so here, really nice looking triangle. I don't see how you would try anything else. Now, Elliott would say, because it's in an impulse pattern to the upside, the likely break is to the upside. I'm saying my experience, and it's only my experience, and I can only speak for me, that when you see these kind of triangles, you got to respect both directions. So I think a strangle on this makes a lot of sense. Now, fundamentals would tell you, yeah, it is likely to continue to the upside and complete that 5-wave impulse pattern, which is really solid as well, with that wave 4 right around the 38.2% fib level. But my point is, put a strangle on it and let it tell you. The ADX is not quite to 15, but it's awfully close. And with a pattern that's that good, it's probably close enough if the liquidity is there in the options to go ahead and do that. From a stock standpoint, if you're only trading the stock, then I would say, hey, let it break out and then make your decision long or short from there. I think you're guessing, in my opinion, if you step in now, even though it's in a 5-wave impulse pattern to the upside. Elliott would disagree with me, but it's been my experience.
Very well. Thanks for that, Rob. So moving back over to Zoom, we have a question from Doric here. Almost 420, right? Rather than wheat, can we check out wheat, please? It's Telecom Wheat ETF. Thanks. Just got my AI membership too. Good luck to all.
Yep, but tomorrow is going to be an interesting day, isn't it?
Yes,
have you seen the Elon Musk thing? Remember back when he had tweeted that he was considering taking Tesla private at $420 a share, and then his bid for Twitter is at $54.20 a share. He's something else. I mean, you gotta find humor, if nothing else, if you think he's really eccentric, but obviously super smart guy and humorous too. Well, with wheat, we had talked about this way back, and I think it was in a TradeFinder where somebody talked about, hey, this vertical move, is it likely to come back? Would it be a good short? And I'm like, yeah, I mean, that's exactly what you want to find when you're looking for a short position, because what goes vertically up usually comes vertically back down, which is exactly what happened. And now we've consolidated right here in this 10 level, and we're starting to build a little bit of move to go back to the upside. I can't see where the move and any commodities type things is over yet. It wouldn't make any sense from a fundamental standpoint. I know we trade fundamentals, we trade technicals, but we respect fundamentals. And so, looking at the chart, I would say that we probably have more to go to the upside. Now, I do like this break above 11, but it's trying to hold it. And if it doesn't, it's coming back to 10. So if you wanted to be a bit more aggressive, you could go ahead and try long position now. And if you wanted to be conservative, let it bounce further off of 11 and then step in. And your stop would be, if you stepped in now, would be if it breaks 11, just get out, let it go to 10 and look at it again, or just add to it when it hits 10. Perhaps put on maybe half a position now. And if it does go down to 10, add to it. Or if it breaks and gives you confirmation above 11, add to it. So when you have situations like this, that's kind of what you do. You step in with a partial position and then adjust accordingly, depending on what happens from there. All right, next.
Back over to YouTube. Manuel asked if Snap is currently in a triangle.
Let's take a look. The ADX is low enough. It's under 15. So that part's good. This is a long triangle, which means that it's taken a bit longer to form than I like. What's the problem with that? Well, usually if it takes a long time like that to form, it can often take a longer time to break out. So it isn't a triangle. It does have a pattern of lower highs and higher lows. So you're correct there. My only concern would be it's taken, 4 months. If you go back here to build that, I like it to be just a little bit more condensed. That doesn't mean it can't break out. And all I'm saying is that experience says that when you have a triangle that's that spread out, that when it breaks, it tends not to be a very volatile move. That's an issue with options, especially if you're putting a strangle on where you're buying the call and buying the put. And so if it's a slow breakout, that can bleed away time decay even while it's moving in your direction. So it is a triangle. I don't know that it's an ideal one for a strangle. I think I would prefer to let it break out and trade it directionally from there. Just my opinion.
Awesome. Thanks for that, Rob. And we are close to time, so maybe I'll close up with this conceptual question from Nicholas here. Wondering if you could talk about whether price repeatedly testing support resistance levels increases the likelihood of a break, or if it demonstrates the strength of a level.
Both. Both. If it comes down and it bounces significantly off a support level or bumps its head significantly off a resistance level, it builds that line even stronger. Now, the longer it does that, the greater chance there's going to be a break of it. And when it breaks, the break is usually more volatile. So you usually don't just get a break and then some sort of a slow, my 45-degree angle run. Usually when it breaks, it's a volatile move. It could get retraced partially and then move to the upside. But yeah, the answer to it means both. And so, yeah, it is really important to pay attention to support resistance. And I know Nicholas knows that. You have to have that second day. Don't get drawn in on the first day. There's so many head fakes that occur in the market. Was today one? I don't know. We'll find out tomorrow. Again, as I said, at last blush, the futures were down based on the Netflix price action. But we're a long way from when the market closes tomorrow. So we are right on time. And so thanks everybody for viewing. Again, sign off the same way every time. Time's the most valuable asset that we all have. And we very much appreciate this. I'm super passionate about this. We very much appreciate you spending some of your valuable time with us. And so we do our best to make that an informative and educational use of your time. Thank you.